two U.S. banks have failed in the past couple of days, leaving many wondering about their financial future.
Chase Wilsey is here to talk about what this means for you. Chase, good morning. Good to see you here.
Good to see you as well.
What happened? All of a sudden we woke up and banks are failing?
So banks are failing, but I think there's a lot of kind of the news being blown out of proportion. What I mean by that is these banks that are failing, they're not these stable banks by any means. I mean, you look at Silvergate Capital, you look at Signature Bank, both of those were high risk in the fact that they took a lot of like crypto asset type banking relationships. Those are high risk, as we know. Then Silicon Valley Bank, I mean, you look at the numbers for this company, I mean, it's mind blowing. They had about $69 billion in assets in 2019. They ballooned to about $210 billion. Wow. That's a huge growth rate in just a few years. And the type of lending they were doing, I would not call it safe lending. They were many times working with venture capital, tech startups, lending against, get this, future revenue, not current revenue, future revenue. They lent against wine inventories. I mean, these were not the safe banks that many people may be thinking when they're looking at the bank they currently use.
I like that you said we don't want to blow this out of proportion, because my next question was going to be, how does this affect the average person? Because I want a little perspective here. You mentioned these are small banks, but they sure do seem to draw people with money. They sure do seem to have a lot of assets based on what you just said. So what is the difference between these banks and your normal Joe Schmo like sitting there with their Bank of America accounts? What are we doing? How is this going to affect us?
Well, there's a couple things to kind of look at when it comes to that fact. The thing, number one, that I want to point out is when you look at, again, $200 billion in assets, that sounds like a lot, right? JP Morgan has about $4 trillion in assets. So Silicon Valley Bank, again, not something that's tiny, but not even remotely close to those big banks. And the other thing that you have to understand is with those big banks, they're held to what's known as the Fed stress test. Silicon Valley Bank did not have to go through that last year. Now, what is the stress test?
And why not?
It's because they didn't hit that minimum. I mean, there's a lot of regulations go into it. These small banks many times don't have the capital and the ability to really pay for the amount of capital it requires to go through these stress tests. So, I mean, there's definitely some debate as, you know, what needs to kind of come into play when you're looking at regulating these smaller banks. But I mean, the stress test, the reason I feel so confident about the big banks, this year's stress test is going to look at what happens if we have 10% unemployment, a 40% decline in the stock market, a 35% decline in residential real estate, a 40% decline in commercial real estate, an 8.7% decline in real GDP. I mean, those are all catastrophic type areas. That tells me that these big banks, they have enough capital to get through this. These smaller banks, these riskier banks like Silicon Valley Bank, again, that was a big problem. It wasn't a safe bank by any means, and people that tell themselves that, I think, need to kind of look back at what actually occurred there.
And some saying with these rapid rise in the interest rates that really contributed, but what happens, Chase, when you see something like that, all of a sudden there's a trickle effect, and now you've put fear into the market, you've put fear in investors, people want to pull money out, and that has a lot of consequences.
Oh, 100%. Fear is definitely kind of what can lead to many problems. And the big thing, too, to understand when you're looking at the banking relationships that you have, what happened with Silicon Valley Bank is deposits started to dry up because they were in the VC and the tech space. Well, deposits started to decline. What happens is banks, they take those deposits, they lend them out, or they buy securities to help generate income to offset what they have to pay the depositors. What happened was Silicon Valley bought a bunch of longer dated treasuries when treasuries were like 1%. Well, what happens as treasury yields go up, now they're around 4%, let's say, the value of those decline. Silicon Valley then had to liquidate a bunch of those treasuries to raise capital as deposits started to leave the bank. They took about a $2 billion hit on it. So if I have a banking relationship with a bank that didn't go through one of these stress tests, I would want to understand what their balance sheet looks like. What are the type of assets that they own? Are they longer dated? What is their deposit base? As I said, Silicon Valley was not a diverse deposit base, very heavily concentrated venture capital. I would want to know how much above it's above the FDIC limit. There's a lot of questions when looking at the banking relationship.
It sounds to me like if you're getting involved with this bank, it was kind of it was almost a buyer beware type of thing based on their size and everything else. Has the government done enough so far? What are they doing to help in this case? Because like what Shali said is like what people don't want is to put the fear of God into everybody else, and then everybody starts to panic when this is just Is it only affecting a small percentage of people, or could there be, or what's the government? Help me, Chase.
I do believe it is going to impact a
Yeah.
small percentage of people. I do think there could be other news headlines that do arise as some of the riskier banks, smaller banks do have some issues. And I'm not talking about all small banks. There's some that maybe did some risky lending that you need to be aware of. But the government, what they've done is they have actually come in and said that all depositors will get their money back. Now, generally speaking, FDIC covers anything less than $250,000. So you're safe essentially at any bank. You may have an issue with getting it the next day, let's say, but you will get that money back if it's less than $250,000. But the government has come in and said they will cover all depositors in Silicon Valley Bank at no cost to the taxpayers. I'm a little wary of the no cost to taxpayers at this point.
Really?
Yeah.
We'll kind of see how it comes out in practice because they did not have that amount set aside. I think about 85% of the deposit at Silicon Valley was actually uninsured above that 250,000 threshold.
Okay, I just one more question. Based on everything you know, and you're in the world of money, if you had to predict what's going to happen in the next few days, people are watching. If they're nervous, what would you tell them?
You know, I think what you're going to start to see, unfortunately, is you're going to see a lot more money kind of start to shift into the bigger banks. People are going to start to take those uninsured deposits, I think, from some of the smaller regional banks and shift them into the larger banks. This could cause some issues, again, with the smaller banks. I'm not in full panic mode. I am very calm, in fact, with the big banks, with our financial system. I think many of the other regional banks as well will still be okay.
Yeah.
But there could be another bank out there that has an issue. I don't want to say this is done, but I think a lot of the big negative headlines are in the past now, and I think we will start to move through this. There may be a couple more days of pain, but I think 3 months from now, I don't think we're going to have a Lehman-type moment where we have the financial crisis.
Which was a mess. We're going to probably have you back sooner rather than later on this because the lawsuits are already coming in.
Yeah.
And they've been filed. Chase Wilsey, we thank you as always. This was a little extra technical, but it was important because this is what we have to talk about. It's what's happening. We appreciate the time.
Thanks for having me.
Thank
got it.
you.